Hey folks, welcome back to the channel. And it's been a while since my last SPY challenge update. So a few weeks have gone by. I'm up $309 this week. Meanwhile, the stock market is up about 2.5%. So this is the latest chart here as of September 1st, ending the 35th week of the year. Overall, I'm pretty happy with the trend so far. More specifically for this week, I made $62 on Monday, $124 on Tuesday, $186 for Wednesday's trade. Thursday, I had a credit of $61 after commission. And then unfortunately today, Friday, I went for a straddle strategy, which didn't work out. And I bought the strategy for more than I sold it at. So I lost about $100 there, but I had 4 trades overall and tried to make back some of it. And then at the end of the day, after the market closed, I put in a bearish trade going into next week. So I bought a put spread. So overall, that's $309 for the week. And here is what my put spread looks like. I'm basically buying the 451 put going into next week on Tuesday because Monday is Labor Day, so the market is closed for the holiday. And then I sold the 450 put to get some credit back. So for this spread, I paid $41 per contract, and I have the potential to make $59 in profit. And then I sold a 455 call just to earn a bit more credit. And it's very unlikely for the SPY to go to 455 by the end of Tuesday next week. But what I want the market to do is drop, obviously, to below 450. Now, the reason I'm bearish on the market going into Tuesday is because over the last couple of days, you can see the market started higher. This was yesterday on Thursday. It went up, but then it came down by the end of the day, and that's why it's this red candle. Same thing today. The market started high, but by the end of the day, it dropped, bounced a little bit, but still ended up lower than it started. So that shows a lot of selling pressure, and the market closed at 451.19. So if by Tuesday, the market closes at 450, which is right here, then I would make the max profit from that put spread. So I'll take it day by day next week. But a really key level I'm looking at is the 453 level, because if I use a Fibonacci retracement from the top of the most recent swing high and go to the bottom, you can see on Wednesday we broke above this green line here, which is the 618. And when that got broken, it was most likely going to continue higher and try to reach this target next, which is the 786. And it came just shy of that today. The reason I say this is a major point to look at is because if the SPY closes anytime next week above the 786 retracement level, then it's likely going to continue to go up and touch this high for the year, which was hit back in July. If I zoom out even more, you can see there was this huge run up starting from October of last year. And there was basically no pullbacks ever since April of this year. It just kept going up until that point in July where it fell. But the question is this the bottom of this correction and the market is going to continue to move higher from here? This level is going to give us clues about that. So if next week the market doesn't close above, let's say 453.8, then there's a good chance this short-term uptrend is over and it would have made a lower high compared to the previous point in July. So it's all going to depend on this level. If it goes higher than 454, then I'm going to be long in the market because it'll most likely try to fill this gap. On the other hand, if it starts to go down again, then short term, I'll be looking for lower targets. So that's it for this week. Thanks a lot for watching, and I'll talk to you in the next one.